Hey everybody, guess what day it is? April 15th, tax time. Are you prepared? We've talked about it over the last couple of videos. Hopefully you've done your homework and you got everything ready and you got your stuff filed. Today we're going to we've talked about mortgages and how the mortgage market is changing. Today we're going to talk about 8 things that you absolutely should not do if you want to get your mortgage approved. Mortgages are living things and no deal is done until they're done. So let's get started and talk about the 8 things that you absolutely cannot do during the mortgage process. Alright, these 8 things are critically important. I've been doing mortgages for 10 years and I can tell you, ignore these rules and do it at your own peril. Alright, item number 1. As we're going through this mortgage process or as you're leading up to buy a new home or refinance home, don't go out and buy a new car or sign a new car lease. Those are big ticket items that are immediately going to impact credit scores and debt ratios. Again, circumstances do affect some of this. If your lease is expiring and you have to get a new lease, then do that. We can't stop you. We can't tell you not to live life, but be aware of what's going on around you. Number 2, don't quit your job or change to a new industry or become self-employed. If you change from a job as a nurse to another hospital as a nurse, that's okay. But don't change from one job as a nurse to outside sales. That's completely different and the underwriter is going to frown on that. So that's a big ticket item. Next one, don't switch from a salaried job to a highly compensated commission job. A commission job requires you to have 2 years of history, 2 years of tracked commissions. And so if you change from a salary job to a commission, that's a big no-no. Something you got to be aware of. So pay attention to that item. Next one, don't transfer large amounts of money between bank accounts. Your investment accounts, your bank accounts, anywhere that cash is being moved has to be trailed. They're going to want to see deposit slips, canceled checks, wire transfers. They're going to want to see the history of the account where it came from. They're going to want to see the 2 months history of the account where it ended up. And if those large deposits create additional questions, then the underwriter is going to ask for additional items. So don't do that. Alright, now I know some of these things sound maybe simple and stuff, but they're very important in the mortgage underwriting process. So let's get started. Item number 5. Don't forget to pay your bills. Sounds easy, sounds logical, but literally people forget to pay a bill, even the ones you dispute. If you're having a dispute on an account, pay the bill and resolve it after the fact. Nothing is to be gained because you're trying to prove to the credit card company or a creditor that you're not going to pay that bill, because ultimately that's going to cost you a mortgage. Item number 6, don't open new credit cards. Anytime you open a new credit card, that's going to impact your credit scores. So be aware of that. People ask me about when I access their credit report for a mortgage. When you access your credit report for a mortgage, you don't have to obtain that debt. You're just shopping for a mortgage. When you apply for a credit card at a Kohl's or a Target and you get 20% off, 10% off, that's completely different. You're obtaining debt. So let's not do that, alright? Item number 7. When you get a gift from a relative, mom and dad gift you money, they do anything to, each parent is allowed to gift you $13,000. Document the deposit. Don't commingle deposits together. If they're gifting you $1,000, then deposit the $1,000. Don't commingle that gift with other funds, and then don't deposit the entire gift. Don't take any money out of it. If you get a $1,000 gift, deposit $1,000 and then take the money back out of your account with an ATM withdrawal or a withdrawal, write a check. What are we talking about here? A gift. Document it, deposit it into your account, don't commingle funds, and accurately deposit everything that was gifted to you. That's a big no-no with underwriters. If you get a gift and then you take that money and do something else with it. That's not, underwriters don't like that. And item number 8, don't make random undocumented deposits into your checking account. Underwriters are looking for untrackable items that could be seller-induced expenses. So don't deposit any money into your checking account without documenting everything and having justification for it. Paper trail, etc. Okay, now there's a lot of circumstances on why some of these items may change, and these hard, fast 8 rules, there's no guarantee that some of this stuff, you have to live life, so I can't ask you to not live life, but pay attention to these 8 things. Again, it's April 15th, get your taxes filed. We look forward to talking to you in a couple weeks. Have a great spring, everybody.